Hi everyone. My name is Arthur Charpentier, and today we'll talk about scope and limits of artificial intelligence. More specifically, I have to say it's really about insurance and also about fairness of predictive modeling. So I will really focus on artificial intelligence in the context of machine learning and the impact of those models in insurance. When we focus mainly on fairness issues. So I will try to be a little bit more specific during this talk on those topics. So as I said, so I'm professor in Montreal, in Canada. Over the past years, I've been working a lot on mathematics of insurance and mathematical models of insurance and economic models of insurance, actually. And more recently, we've been working on insurance biases, discrimination, and fairness. So there will be a book coming out, I guess, before the summer. I should also mention that there's a team behind me. So here are a couple of students. Some of them were working on the project. Some of them will be working on the project. So Francois was working as a postdoc and is now back in Paris. Philippe was a PhD student here and now is back in Switzerland. I started a PhD this September, as well as Olivier. So both of them are working on fairness and insurance. And I can also mention two interns. So Suzy, who was there in the past fall, working on reinforcement learning, more in the context of algorithmic pricing. And Anna, who's coming from Colombia in a couple of weeks, and she will be working on a very specific aspect I will talk about today of predictive models and some regulation that we start to have in the US. Okay, so just to get back on very basic principles of insurance and what we call actuarial fairness, which is actually something that you guys have probably heard about. So it's the idea that insurance is a risk transfer, right? So we have policyholders, we have insurance companies. Policyholders are supposed to pay a premium to the insurance company. And then if the policyholder experiences a claim, then there will be an indemnity paid by the insurers in the case, bad case, where we have a claim on the policyholder's side. But that's not enough to define insurance, because actually to get insurance, you need a lot of people. So it's really about pulling together a lot of policyholders. And we have this definition of insurance, which is insurance is the contribution of the many to the misfortune of the few. So you cannot have only one policyholder, right? So you need many. Otherwise, it's like a bet. But here you have a lot of people, and then we're going to get the law of large number. The insurers will use the fact that actually we have a lot of people to learn about their risks and to price them accordingly, right? So the trick is to find a way to define a fair definition of this contribution, right? Because so far the definition is very vague. Insurance is the contribution of the many, but we don't know what this contribution actually should be. And there's an additional problem, which is simply the fact that actually policyholders could be actually quite different, right? So some of them can be extremely risky, others will be non-risky, and the idea of fairness in the context of insurance was stated, I guess, maybe 40, 50 years ago. And it says basically that the premium, the contribution of policyholders should be somehow a function of the risks. So the more risky you are, the higher the contribution should be. So this is something that sounds fair in a way, okay? But we're going to investigate something slightly different, which is the problem that actually we're not supposed to make discrimination with respect to some sensitive attributes. Okay, so if policyholders are different because of some valid heterogeneity, which should be related to the risks, then it's okay. But if it's related to a protected attribute, then it's not okay. And this is the topic of today's talk. I will give you a couple of examples and motivation related to our work. I should stress also that actually fairness is a very old topic, because actually you can find and discrimination, you can find textbooks like in economics, if you think of Gary Becker, economics of discrimination. For decades we have scientific literature on this question of discrimination, but more recently people working on computer science understood that actually those black box models can be discriminatory, and they wanted to understand what was going on. So for a popular example is this one, which was an article published by ProPublica a few years ago, maybe about 10 years ago. It's related to, so it's not directly insurance, but it's what it's called actuarial justice. So actuarial justice is just using statistics and models in a legal perspective, right? So it's about having softwares and models that can give scores about criminals or supposed to be criminals, and one of them is Compass, right? So Compass is about reoffense. So some people were in jail for some reason and they want to get out, so they have to meet with a judge, and the judge can get a score, right? So based on the score, he can decide to release those people. But when you say, okay, you can get out, you want somehow to be sure that the risk of reoffense is quite low, right? So they have Compass suggested a model, and there was this paper, and actually you got the GitHub repo where you can find the code and the data, right? So we have this kind of information on the right. So we got people in jail. Okay, so we have different risks, low and high risk. Actually, it's a scale from 0 to 10, but it's divided in two: low risks and high risks. Then we got reoffense and non-reoffense. Okay, and we got black and white people. Okay, so I will show you more details in a second. And on the left, you have some pictures that were taken or shown in the article in ProPublica, where you have all the time you have those two pictures. You have, as you can see, someone who's white on the left, someone who's black on the right. More or less, they did the same thing. Okay, but the score is very, very different. And the point of ProPublica is to say, well, it looks like this algorithm is kind of racist. Okay, so they investigated a little bit, and their point was the following. So if you take those statistics I was showing you, and if you look at among those who did not reoffend, the proportion of white and black people, or more likely, if you focus on white people and you look at those who did not reoffend, 22% were wrongly classified, which is a decent number. But when you look at black people, this probability is much, much higher. So their point is, based on these conditional probabilities, it looks like there is a problem. There's a racism problem, because probabilities of being wrongly classified when you're black is much higher than when you're white. So it looks like the algorithm is racist. This was the point of ProPublica. And then you get the answer by Compass, looking exactly at the same number, but looking at different probabilities. And within white people, if instead of looking at the proportion of people who did or who did not reoffend, you look at those who were classified as high risks, actually 40% did not reoffend within white people. And if you do the same among black people, well, you got probabilities that are very close. So it's 35% against 40%. So their point was, I guess, if you look at a definition of unfairness and discrimination, which is slightly different, you can get very different outputs. So that's one problems we will have all the time, which is if you use the same kind of data, depending on the way you define fairness, you can end with very different results. So this is the first motivation. We want to understand more deeply what's going on, and how can we formalize all that. A second point is related to the fact that actually discrimination is not only a statistical problem. Actually, it's a legal problem. And there are a lot of discussions in legal documents about the use of what we might call sensitive attributes in different areas. So in the context of, so in Europe, we have this European directive about the use of gender actually in insurance pricing. So back in 2004, we got this regulation saying that basically, if you have products, insurance products, and you price them, well, you're not supposed to be using the sex as a feature. Okay, so you're not supposed to get any difference based on the sex. So this was the original first article of the law. Then you got a second one, actually, which is in gray, saying, well, you're not supposed to make any discrimination with respect to the gender or the sex, but in the case the sex is a determining factor of the assessment of the risks, which could be seen as risk-based and relevant with actuarial and statistical data, well, in that case, you can do it. And that's an interesting article, because what it was saying basically is actually if you can prove that a variable that can be seen as discriminatory, like the gender or the sex, is actually a determining factor. So we don't know exactly what determining factor is, but it sounds like a causal effect. Okay, so if your gender actually cause something, if your sex cause something, possibly on mortality or something, then you are allowed to use that by the law, right? So this was the 2004 version of the regulation. Actually, this second article is not valid anymore. Okay, so it was so there were charges against this article, and actually they won. So this second motivation is not valid, but we can see it in different countries, like in Quebec, actually in Canada. This kind of second article is still valid. This is more or less what we have in Quebec. Okay, so I'm sorry I put it in French, but you're not supposed. So you have a list. Actually, I didn't mention the first articles, but you got a list of what is protected and what is seen as a sensitive attribute. And then you got this Article 20 saying that basically, if you have this determining factor de discrimination, then in that case you can do it. So it's possible for the age, the gender, and the what they call état civil of the person. So you can do discrimination if you can actually prove that it's a determining factor. I wanted to mention another one, which is very recent. So it's back in the last fall, so September 2023 in Colorado. We have this proposed regulation about quantitative testing of external consumer data and information sources, algorithm and predictive models, using actually focusing on race. Okay, and you got this article like section 5. Insurers shall estimate the race or ethnicity of all proposed insured, etc., etc. So what they say, well, the starting point was, by law, you're not supposed to make any discrimination based on the race or ethnicity of policyholders. And then insurance company came back and said, well, we'd love to do that, but actually we don't collect this information. Okay. And we know, maybe I will get back later on that one, which is called fairness by awareness. It's not because you hide a variable that actually you get rid of it. Okay, so not having the data is not a sufficient way to say that actually you do not discriminate. So regulators in Colorado said, well, in that case, if you don't collect the race, you're going to predict it. And it looks like you got some models in the US that actually can help you to predict the race or ethnicity of people, actually based on two kinds of information: the name of the person, so last name and first name, and also the zip code. Okay, so it's Bayesian improved first name, surname, geocoding. Okay, so it's possible to use this variable or to estimate this unseen variable. Okay, so it's something which is very hot. A lot of countries and states and provinces are talking about this kind of problem, and we can see something in Colorado. Another thing we can see in Colorado is actually law is usually based on the fact that if you feel like you've been discriminated against, well, you can sue. Okay, but it's very difficult because discrimination is not something that you feel individually. Okay, so it's a collective problem. I feel discriminated because I belong to a group which is usually seen as a negative minority, something like that. In Colorado, what they want to say is, well, we won't wait that people sue companies for discrimination, which is extremely difficult to prove. We're going to ask companies to prove that actually they don't discriminate. So it's a very different perspective, a complete change of responsibility. Now companies are supposed to prove that actually they don't discriminate, which is very, very different. And as I mentioned in the previous motivation, we have a problem because it's very difficult to define properly what it means to not discriminate. But again, I will get back on that in a second. Something else I should mention and stress is the fact that I give again the European regulation, but you can find that in different countries, this definition between direct and indirect discrimination. Okay. I will mainly focus on the second one because that's exactly what we usually have in insurance. Because in all the cases I've seen, I don't see any racist or sexist people or actuaries. But it's not because you don't have the intention of being unfair to some minority groups that actually the model is not going to do that. Okay, so there's no intention by the designer of the code or the model to get something that will be discriminatory. So this indirect discrimination is kind of tricky because actually we really have to dig into the models or the outputs of models to somehow ensure that actually they don't discriminate with respect to some variables. Okay, so it's just something that you can also find in French regulation. You're not supposed to get a specific intent by the designers to get discrimination. So it's something which makes it quite difficult actually to assess. A third motivation is related to something that you guys have probably heard about, which is redlining. So redlining gets back almost 100 years ago in the US, right? So we got the Home Owners Loan Corporation that decided to create maps in the US for different cities. Okay, so for almost all the big cities in the US, you can get those kind of maps, like the one on the left, where you got black areas and green areas. And in those red areas, you were not supposed to sell any loans to people because most of the time houses were not very good. Okay, and that was okay. I mean, it was kind of related to the graph in the middle, which is an unsanitary index. Okay, so you get old houses and stuff like that. Those are fictional maps, right? So it's just to illustrate and show you what's going on. But it's basically the idea, right? So we have old houses with a lot of problems. So really, you don't want to sell loans or maybe household insurance there. Okay, so when as I told you at the beginning, if the decision not to insure or the price is based on the risk factor, then it should be seen as okay, right? Mainly because, well, people don't want to subsidize for the other group because they don't want to make work in the building and so on. So it was seen as okay. And then in the 70s, we got a different perspective on those kind of issues when people started to look at proportion of Black people in some neighborhoods. And their point was, well, those maps are kind of racist because red areas are areas where you got more Black people. So the way you sell insurance and loans is racist. And again, you don't have the intention of people, but basically it is. So we have an issue, and redlining was a big issue in the US, okay, related to race. I should also stress that so in many areas, it's in many lines of business, it's forbidden to use something like that. I can mention that actually we can see that as blue lining currently, which is areas that so it's still red, but it's because of climate change. Okay, so we got red areas where the risk of flood events, of different kinds of risk, of seismic risk is very high. Okay, so we start to see those maps coming back. And the problem is actually those red areas, even if it's not only based on race, it's also based on wealth of people. Okay, you're not supposed to make any discrimination against wealth in Quebec, for instance. Okay, so this is seen as discrimination. So poor areas seen as risky can be seen as problematic. Okay, so what we can see from this example is actually that actually dealing with discrimination is fundamentally an ill-posed problem. What I mean by ill-posed problem is, well, we try to get something which makes sense from an economic perspective, which is, let's call that discrimination, but it's really price differentiation based on the risks, and this can be seen as valid, but it's called discrimination, and it's not okay when it's correlated with a sensitive attribute. And the thing is, all those variables are usually highly correlated. So how do we disentangle all those problems and make a distinction between what is a valid discrimination and what is an unfair discrimination. Okay. And finally, the last problem is the fact that actually, maybe I will start with the very bottom of the slide, which is the whom problem, which is the is out, the big difference between what is and what should be. Okay. So it's really the fact that so we have two definitions of what normal could be. So you got the statistical one, okay? So it's normal because this is what you've seen for the data in the past decades, so it's normal. So it's the statistical normality, something like that. And then it's you have the ethical norm, what you want to have. So the norm is not what you observe, but is what you would like to get, okay? So the thing is, usually the two can be extremely different. For instance, I've been using a motor data set here. Okay, so I got proportion of people claiming a loss. So it's a bit less than 9%. And we can see that we have a difference between men and women in my data. So about 9% of the men claim a loss, about 8% of women claim a loss. So it's not that big, but it's maybe a 15% difference on the premium. And the thing is, even if I don't use the gender in my pricing model, okay, so I'm going to put some variables one by one. So I try to put them based on variable importance. So the first one I put is the most important variable in my pricing. So I start with no variable at all. So it's the 8.68% average for everyone. So I start with an identical estimation of my probability for everyone. And then when I start to put some features, some explanatory variable, I start to differentiate. Okay, and then I look at the average frequency of men and the average frequency of women. And this is what we can see on the graph on the right. So the more variable I put, well, the more likely I will actually reproduce what I did observe in my data. So what does that mean? So it doesn't mean that I got a variable that can be a proxy of the gender. Okay, actually I don't. Okay, so if I try to predict the gender based on the other 15 variables I get a very poor model. So it's very difficult to predict the gender. So it's not exactly this story that we have here. It's more the fact that actually, if you got a difference in the data, even if it's based on a sensitive attribute and something you're not supposed to be using in your model, well, the model is very stupid. It will try to reproduce what you observe in the data. It's essentially what we ask machine learning models to do. It's about generalization. If you observe something in your training data, whatever it is, the model is going to reproduce that. Okay, so it's really this is out problem because you got what is in your data, and if you don't correct for it, then the model will basically reproduce it. So you got two ways, actually three ways to deal with it. Either you distort your data, the input out the data, so that what you have, what is more related to what should be. Okay, so you can put weights or whatever. Okay, so this is a pre-processing version of getting fair premiums. Or you can still do your models, but at the end, you will have to distort them to create actually fairness. Okay, so it's something that you can find in many textbooks on fairness, which is actually machine learning will never give you anything for free. If you want gender neutrality, you will never get it for free, especially if you start to get difference in your data, as I've seen before. You must explicitly ask for it. So because we do math, what it means is, if I explicitly ask for means we need a formula expressing what unfairness is, and then put that in a model so that the model will not do any discrimination. Okay, that's more or less what we should do. I mentioned a statement in a textbook. So it's a textbook on ethics of discrimination, and there's a full chapter on insurance, and it starts with this paragraph saying that insurance is very specific in the context of discrimination, because usually there's no malicious intention, as I said before, but it's just because we got a lot of correlation between valid variable that can be used to make price differentiation and what is not seen as legitimate. Okay, so actuaries are paid to make discrimination, but discrimination based on the risks, and this is seen as okay. I mean, it's actually their job. Okay, and just a very last statement. It's Kranzberg's law stating that basically technology is neither good or bad. So there's nothing about ethics usually in technology, but it's not because there's nothing about ethics that actually it's going to be neutral. So always have that in mind, and it's really this very first sentence if you want to get gender-free models, you need to explicitly ask for it. Okay, so the agenda will be the following. So I will mainly focus on fairness. I will start with the concept of what we call group fairness. Okay, so it's based on statistics and demographic data. So we won't look at individuals. We look at the overall distributions of different quantities with three criteria: the independence, we call demographic parity. We're going to spend half of the time on that one. Separation and sufficiency. Sufficiency is related to another concept we're also working on in the team, which is calibration of model. I will talk a little bit about that. And then I will talk about individual fairness. Individual fairness is not looking at the data overall. It's really about focusing on individuals. What would have been your outcome if instead of being a man, you were a woman? What would have been the probability to claim a loss if instead of being black, you were white? Okay, so it's really counterfactual fairness. This has a lot to do also with interpretability. And this is also a very hot topic we're going to work on, especially starting next year. Okay, so that's more or less the agenda for today's talk. Sorry, the introduction was quite long already. Another things I should stress is insurance is extremely specific. So maybe I should get back on computer science and what people do in computer science, especially in the context of classifiers. So a lot of the literature in computer science is about pictures, extracting information from pictures or different texts or whatever. But usually you have a corpus of documents, let's say pictures, and you want to assess if you got someone or something on the picture. Okay, so possibly you want to identify cats or dogs on pictures. Okay, so I give you a picture and it tells you there is a cat and possibly here it is. Okay, so we're going to train a model. So a model means basically you give something as an input that can be whatever you like. So it can be a picture, and then it's going to give you a prediction. And here the prediction should be cat or dog. Okay, so it's a very simple binary classifier. Of course, you can do that in more interesting topics like medicine. Okay, so I give you pictures of MRI, of X-rays or whatever, and then I'm going to get a prediction about having a specific disease on someone based on the picture. Okay, so it's a very classical problem in computer science. But it's not exactly what we do in insurance, actually. I forgot to mention that actually we focus on prediction. Okay, so I give you another pictures and I'm going to get a prediction. Okay, I give you a picture of my dog and I want the model to say this is a dog, right? In insurance, it's slightly different because actually usually we don't care about the prediction of the class. I care really about probabilities. We're not the only one. The first one I'm going to mention is weather. Actually, there were a lot of articles in the scientific literature about getting the probability to get rain, something like that. So we don't really care. We don't really want to get on the weather website if it will be a sunny or rainy weather. We want to get a probability. Okay, so sometimes we want something more. We don't want only the class. We want a probability. Okay, I mentioned another one, which is men and women. Actually, I'm going to show you why in a few slides, but actually I've been playing a little bit with those models that can predict the gender of people based on the on a picture, and I want to get probabilities of that one, so it can give me more information about the models. And then I focus really on insurance. Why? Because actually, well, you actuaries all know about that, but basically, I don't really care who's going to claim a loss. Okay, I don't really care who's going to get a car accident, who's going to go to the doctor. What I really care about is individual probabilities. What I want to know is who's going to claim a loss, who's more likely to claim a loss, just because this probability actually will be used as a premium, more or less. Okay, so it's a very simple principle, which is the pure premium. Pure premium says basically that the premium should be proportional to the probability to claim a loss. Okay, so we really care about those probabilities. Okay, so I stress on that because actually this is not what you can find in the scientific literature in computer science. Usually they don't really care about the scores. They really care about the classes, and this we need a little twist in the definitions of different concepts if we want to have a more actuarial definitions of different concepts, right? So let me get in a little bit into the math, right? So X will be, as usual, the explanatory variables. I will use the letter S to say, okay, this is a sensitive variable. So I'm going to use a binary sensitive attribute, okay? can be whatever you like. So I'm going to use A and B letters and not 0, 1, just to avoid confusion with the Y. Okay. So let's say gender. Okay, binary gender, male and female, just to illustrate. Okay, but it can be black, non-black. It can be whatever you like. Okay, just think of your favorite sensitive attribute and assume that it's binary. Okay, I'm going to stress a couple of things during the talk, but for definitions, it's going to be based on binary sensitive attributes. And then we got the Y variable. Okay, so I really focus here also on classifiers because it's usually a starting point when you try to get away from regression or classical continuous regression. Okay, so we can extend that to Poisson models if you focus on frequencies or whatever. But here I'm going to focus on classification. Okay, so Y is binary, sick, non-sick, claim, no claim, so on. Okay, so Y is binary. And then I got to make predictive model. So I'm going to get a model M, okay, and it's going to help me get a prediction. So in most of the models we use in actual science, especially like econometric models, if you want to have a logistic regression on that one, you start with a model on the probability. And then you have a cutoff saying if the probability is too high, then I'm going to predict a 1, right? So it's exactly what we do. We get a class based on the score, okay? So again, in computer science, they focus on this Y hat, which is the prediction of the score. It's not what we care about here. We're going to focus really on the score. Okay, so I want to get properties on the score and not the properties on the Y hat. Okay, so based on that, we have different definitions of fairness. The first one is what we call independence, or from a probabilistic perspective, but it's what we call also demographic or statistical parity. What it means is we should have independence between the prediction and the sensitive attribute. Okay, so if I get back to my definitions based on scores, I want to get a score which is independent of the scoring variable. The independent between being actually the probabilistic definition of independence. If it's too far away, just think of non-correlation. Okay, it's stronger, but it's related to this question. Okay, so we don't want any correlation between the prediction and the sensitive attribute. We have another one which is called equalized odds, which is related to what we call separation. So we don't want simply the independence. Actually, we want conditional independence. So conditional on the fact that you focus on the zeros, you want to get independence between the predictions and the scores. Sorry, the prediction and the sensitive attribute. Okay, and you want to do the same in the other class. Okay, so conditional on Y, you want this independence. As you can see, it's much easier to define this kind of property in the context of binary classifiers. Otherwise, it's more complicated because if Y is continuous, we need to define some neighborhoods and so on. But it's something that we start to work on. So equalized odds is usually defined in the context of classifiers, and it can be related to very classical tools we use in the context of binary classifiers, which is ROC curves, probability of false positive rate and stuff like that. Okay, and the very last one is what we call sufficiency property, where actually you flip the score and the Y. So instead of asking for the independence between the score and the sensitive attribute conditional on Y, you're going to ask for an independence between the Y and the sensitive attribute conditional on the prediction. Okay, and this one, as we will see in a few minutes, is very related to calibration. Okay, so if we focus a little bit more on this demographic parity, the question we ask is, this is the definition of independence. Will the probability to predict a 1 be the same in the two class? Okay, so we have the sensitive attribute, we got the class prediction, and if the two are equals, it means we have demographic parity. And just to highlight a little something, actually, this is the kind of definition you can find in HR, like for admissions of men and women when they apply to jobs. Okay, we want to get the same probability to get interviewed if you're a man and a woman. Okay, possibly based on similar explanatory variables, but basically this kind of formula. Now, this property of based on probabilities can also be defined on expected value, because when you get a binary classifier, actually, if it's binary, then the expected value is actually the probability. Okay, so we can focus on the expected value, and very naturally you say, okay, I got a definition of demographic parity based on this score if actually the expected value of scores is the same in the two groups. Okay, so you don't really look at the distribution, you just focus on the probabilities. So the average value of the score in the two groups. Okay, so here I got two distributions, A and B. Obviously, we got different distributions. One is skewed to the left, one is skewed to the right, but they got very different averages. So in that case, we would say, well, we got a discrimination, okay? Or at least we got unfairness because the average in the two groups are not the same. This is what I call weak demographic parity because somehow looking at the average is not sufficient because in some cases, maybe you want to focus more on distribution than on the average. So this is what we call strong demographic parity, which is the probability to be, let's say, between, I don't know, 40 and 60% should be the same in the two groups. So whatever the interval you take for the score, the probability to get this proportion of people between 40 and 60% should be the same in the two groups, right? So it's really a definition based on distributions and not expected values, right? So this is basically the kind of graph we have. It looks like here the probabilities are different, but still it's not sufficient because, as you can see, here the curves are very different, even if the probabilities are very close. Okay, so we need to look at all the possible intervals. I will discuss a bit more this definition because it's very related to what we call what is called optimal transport in mathematics. So to define properly optimal transport, I need to define distributions of scores. And I will not focus on the densities we've seen before, but I will focus on cumulative distribution function. Okay, so what I will call big F subscript A, it's the probability, the cumulative probabilities distribution function associated with score S. So I look at all the proportion of people who get a score below U, and this will define F of U. Okay, so I got this definition in group A, so the cumulative distribution function of scores in that group. So it's the graph on the right. So we got the proportion on the right, so between 0 and 1. So everyone is below 1. Everyone is above 0. Okay, so everyone has a score between 0 and 1, which makes sense. And here what we can see is basically, if you look at 50%, well, about 80% of the people get a score below 50%. Okay, so we got a distribution which is skewed to the left. We can do obviously the same for the B class. Okay, we get the cumulative distribution function in the B class, which is this time, it's not translated, but it's shifted to the right, right? And then we can play a bit more. Okay, so what if we focus on this score? So we got people in group A. They got a probability, a score which is between 40 and 60%. Okay, those 40 and 60% are the levels of the score. Okay, the idea with optimal transport, I will not focus on the values taken by the score, but the probability or the levels associated with scores. Okay, so let me get back a little bit more on that one. So I'm looking at the levels between 40 and 60%, right? So what it means is basically if you're between 40 and 60%, well, you're not in the bottom of the distribution. Somehow you're a good risk because when you look at the distribution, it's very skewed to the left. So being between 40 and 60% actually makes you a good risk. But you can prove that actually 2/3 of the distribution is below 40%. 1 out of 10 is above 60%. So you're between 60% and 91%. Okay, so you're in the third tier possibly of the distribution. Now, what would that mean if you were in the other group? Okay, so I'm going to focus on those probabilities associated with scores. What would be the ranks? What would be the scores of people in the other group? So in group B, if they were also related to the other one in the group, in this top third of the tier of the distribution. Okay, so I want the ranks to be between 60% and 91%. So I focus on people being seen as good risk, and actually I try to get back the implied levels of the score. So in that case, what it means basically is that you should have a very high score. The score should be between 74% and 86%. Okay, so if I try to wrap up, what it means basically is you want to see how people compare between group A and group B. Okay, so what it means is based on the relative distribution of score within groups, if you got a score between 40% and 60% when you're in group A, it means that within your group, if you belong to group B, then your score should be much higher. Okay, it should be between 74 and 86%. right? So we try to compare those two quantities, those two intervals. And the thing is, if those two intervals are very different, it means the scores are different. Okay. And the way we go from this first interval to the second one is what we call the optimal transport mapping, which is exactly the curve you can see on the top corner. Okay, so I got the distribution in group A on top, distribution in group B on the right, and then we got this blow curve, which is how far away are the two groups from each other. Okay, so this is exactly the kind of graph we're going to see all along, because actually this is exactly what we're using. Okay, so just to be a little bit more explicit, what we call the optimal transport mapping is just taking the quantile function in group B applied to the cumulative distribution function in group A, and this gives me a transport. How should I interpret your scores if you were in the other groups? Okay, so I don't want to compare you based on your scores. I want to compare you based on the quantiles you have in your group. If I want to compare the scores you will have if you were supposed to be a good risk in group A to the scores you would have if you're supposed to be a good risk with exactly the same kind of probabilities if you were in the other group. That's exactly what we will try to do. Okay, so we're going to use the probability to be in group A. So instead of looking at your probability level, like 40, sorry, at the score level, like 40%, I'm going to look at the quantile. Where does it put you? Actually, if you're 40% in group A, you're in the top 66% of the distribution. So I'm going to focus on this probability, and then I'm going to look at the quantile level in group B, and then this will give me a score in the other group, right? So it's exactly this optimal transport we will get. And if this optimal transport mapping is not identity, then we got discrimination, right? So it's exactly what we look at. And actually this optimal transport is related to a very old problem that started with Monge. I'm going to get back to that one in a second. It's related to an optimization problem, right? So it's about optimizing cost of transport, but I will get back to that one in a second. Okay, maybe another interpretation is based on scores and statistics. What if we got two samples of points? So instead of having the distributions we got on the top corner, focus on the points we got at the bottom. Okay, so I got individuals in group A, individuals in group B, and I want to see how far away they are from each other. Okay, what you can see is obviously one is more shifted to the left, one is more on the right, so it looks like we got discrimination in a way. Okay, so I got two samples. Okay, I'm going to assume that they are ordered. So M1 will be the lowest score you get in group A. MNA is the largest one. Okay, so it's good risk on the left, high risk on the right, right? So we have those samples of score in group A. We got the same in group B. I should stress that for the example, I'm going to have the same N. Okay, so we got the same number of individuals in the two groups, but it can be easily extended to non-identical numbers, which is what happens in real data, right? So we have, if you have a portfolio with men and women, there's not necessarily the same number of men and women in the two groups, right? So we have those two samples, and actually we are going to link them. So we're going to match individuals. Optimal transport has a lot to do with matching. It's about linking people together when they're in two groups, right? So this is what we observe on the bottom right. Okay, so I'm going to take the lowest score we got in group A and match it with the smallest score, but in the other group. Okay, so M1A should be associated with M1B, M2A should be associated with M2B, and so on. So I'm going to create this this mapping. So I'm going to associate them again, not well, and intimately based on their quantiles, but it's just the ordering, right? So if you're the smallest one, it means that actually your quantile is close to 1/n, something like that, right? So I'm going to match them together. Okay, so it's exactly what we do. We create this mapping by associating people in the two group based on their orderings. Okay, so this is exactly what we do. If this mapping is not identity, so if individual, which is the smallest one, is not the same level as the other one, it means that we got differentiation. We got discrimination because we have a shift in the distribution. Okay, why is it related to optimal transport? So let me get back. It's a side note to Monge problem. Monge problem is related to a thesis he wrote about déblai and remblai, right? So déblai is the hole, the excavation site, and the remblai is the pile of sand. So basically, it's about transporting sand from a hole to a pile, okay? And to do it optimally. And you want to minimize the cost transport because, well, you want to take one grain of sand and put it in the other group, okay? Or if you don't agree, then just imagine that it's very big and you got to put sand in a truck and you want the truck to drive as less as possible, okay? So it's really about having this optimal transport, getting you from this first distribution to the second one, okay? And again, it's because we have all the same volume in the two on the same areas, then it's having the same kind of distributions in the two, okay? So we can interpret them as probability distributions. So we're going to transport those grains one by one from the first group to the other one, okay? This is a purely random one, okay? So I just start somewhere in my distribution, and then I'm going to transport it somewhere else. Obviously, it's not efficient, okay? And Monge's problem was, how can we solve this problem as an optimization problem? How can I minimize the total cost going from the déblai, the hole, to the remblai, the pile? Actually, what it says is basically you have to be monotonic, okay? So you have to transport them like that. So basically, when you have a grain which is on the very far left, on the hole, then it should be on the very far left on the pile. Okay, so you're going to preserve the orderings. And this property of increasing mapping actually is exactly a result that we're going to exploit because we want to have this kind of properties. Okay, so we're going to transport people from one group to the other one. And just to highlight a little something, though, this is what we did call the optimal mapping, okay, which is increasing. Actually, it's related to a property I didn't mention yet, which is the fact that to have this kind of property, this optimal property, you need to add a little assumption, which is the fact that the cost is a convex function. Okay, so optimal transport has a lot to do with convexity. Maybe I can show you in a very small example. Okay, so we got 2 grains of sand in group A, 2 grains in the group B, and we want to transport them. Okay, so here we got 4 values, 1, 2, 3, 5. We want to match them. Okay, so the first, and we got a cost function. Okay, so here it's a quadratic one. It's a convex function, a strictly convex function. And the first idea would be, okay, maybe I will switch them. So I'm not going to keep the ordering. Okay, so I'm going to match the smallest one in group A to the largest one in group B, which will give me a distance of 4. But then the cost will be much higher because we got this quadratic function. So it's 4 power 2. And then we got this very tiny move from x2 to y1, right? So it's a small one of 1. Now, if we look at the total cost, so we got this cost of 1, this distance of 1, distance of 4. So if I look at the overall cost, then I got this 16 plus 1, which gives me 17. Okay, but if I compare with the other one says, okay, I'm going to keep the ordering. So I'm going to match the smallest one with the smallest one in the other group. So I got a distance of 3 and 2. What you can observe, and this is something you will always have in optimal transport, is actually all the sum of distances are the same. So if you think in terms of economics, it's the property of mean preserving. We have the same sum, we have the same average of distances, okay? And then we will look at the cost, but the cost is a convex function. Okay, so it will be much higher. Here in that case, we got the sum of the cost, which should be like that. Okay, so I got 3 power 2 plus 2 power 2, which makes 9 plus 4, which is 13. 13 is smaller than 17. So it's cheaper to keep the ordering, so match the smallest one with the smallest one in the other group, and then make this kind of transport. Okay, so this is Monge's problem, and this is exactly what we use. We try to match people in the two distributions, and that's exactly what we want to do. Okay, so here I do it on the distribution perspective, but we can also do it for individuals. Okay, we can match them individuals by individuals, and that can help me to get a definitions of counterfactuals, actually, right? Now, there's something else we can do with this transport, which is, okay, we've seen that we got differences. It's exactly what we got on the graph in the middle. We got points slightly different. So the smallest score in the group A was very close to, I don't know, 2%. In the other group, it was close to 20%. So there is a big difference, right? Now, what if we want to get mitigation? So mitigation is, we observe that we got a difference, but we want to mitigate it. So we want to reduce it. So somehow what we should say is, well, for those non-risky people, there are extremely low scores in one group, not that small in the other group. Maybe we should be in between. Okay. So maybe we can look at points in the middle and say maybe we can make some sort of arrangement between those distributions. Okay, this is exactly what we got in the lower corner. Okay, so we got distributions of score in group A and group B, and we want to be somewhere in between. Okay, so this is the kind of thing we will look at. This is a mitigation property. And if we want to get interpretation, what I'm basically saying is I'm going to use 1/2 and 1/2. So the points, the weights we use between the two groups are actually based on the proportions. Okay, so I did use 1/2 because actually we got the same proportions in the two groups. And then what we can see is I take 1/2 of the scores that I obtain in my own group, A, and then I'm going to use what should be the counterfactual or the transported version of that individual who got a score MA of X, if that person actually was in the other group. So I transport that to the other group. Okay, so this is exactly what we propose as a mitigation scoring when you have discrimination in two groups, right? We can consider a lot of averages, okay? But actually what we can prove is that what is called Wasserstein barycenter, which is actually based on optimal transport, is optimal in terms of empirical risk, right? So, and it will also give you balance. So what it means is basically if you got balance scores, so what it means is basically the total sum of the expected losses is equal to the sum of the average of the prediction, then in that case, when you use those averages, you end up with a balanced model. Okay, so the average, the sum of all the predictions is actually equal to the sum of the losses, right? So you get a balance. And this is the one that will give you less risk or more accuracy somehow, right? So this is exactly what we use. And we use this kind of model to derive a fair version of those models, right? So how do we define that? Well, it's very simple. If you belong to group A, then I'm going to use a weighted average of scores you got in group A and score you would have obtained if you were in group B with the same probability level than the one you have in group A, right? So it's exactly what we use. For that one, we use the weights, probability of A and B in the two groups, scores in group A, probability associated with the score you got in group A, and then use the quantile to get the associated counterfactual version you would have obtained if you were in group B, right? And then we do the same in the other group. Okay, so this is a very simple way to get mitigation actually in those kind of models. So far, we were talking about demographic parity, right? So we were looking at the distribution of the scores in the two classes, right? So what we are saying is the distribution of the scores conditional on S should be the same in the two class, right? So it's demographic parity. If we get back to the original version in computer science, it's really about the class, right? So probability to be classified as a high risk, conditional on the gender, on the race or whatever, which is considered as sensitive, should be the same, okay? And if we get back to COMPAS, actually, this is the interpretation. Okay, so the probability to be classified as a high risk should be the same in the two groups. In the data set, we can see that the statistics are very different. So it's extremely high for Black people, right? 58% chance to be classified as a high risk. But if you're a white person, then it's much lower. It's 33%, right? So it looks like we got a bias in this data set or discrimination. But this is not what we're talking about in the original examples, actually. Okay, so when I was showing you the COMPAS, actually, I used something which was an additional conditioning. And we mentioned that, which is a different definitions of unfairness, right? So it's related to this idea of equalizers, okay? So what we were looking at was basically conditional on the fact that you did not reoffense, okay? So we add this little conditioning on Y. We're looking at the distribution of Y hat or the score, conditional on Y and the sensitive attribute. And this was the definition used in ProPublica, right? So we have this big difference in probabilities, 42 against 22%. And then we have the very last definition that was the answer of COMPAS, which was no, instead of looking at the distribution of Y hat conditional of Y, look at the distribution of y conditional on 1 hat. Okay, so in that case, what we got is the probability to be non-refunding, conditional on the fact that you were classified as high, is more or less the same in the two groups. Okay, so this is another way of looking at fairness, which is not only looking at y hat or the score conditional to the sensitive attribute, is to use also the y variable. Okay, so this were the other definitions we were looking at. The very last one is actually related to calibration. Okay, so again, we can look at the scores, or instead of looking at probabilities. So we can look at the expected value of the scores conditional on S, demographic parity. We add y hat, this is equalized odds, or we just flip it. So the very last one is interesting because that's a very hot topic in computer science, this question of calibration, right? Conditional on the prediction you got from the model, what is the output? Okay, so assuming that you were classified as a high risk, what is the truth actually? Okay, so this is called calibration. I will briefly make a digression on that one because that's a topic we're working on currently, which is looking at this distribution of the outcome conditional on the score to see what's going on. So to get back on that one, we need to get back to what we try to do in a model. What is this score? The score is interpreted as probability. Okay, but the probability it's something difficult because probability is the way we define probabilities is based on sampling and reproducing experiments. Okay, so that's basically, if you get back to original definitions you got in, I would say high school, but I guess it started in secondary school. When you start talking about probability when you throw a dice, we know that it's 1/6. Okay, we can use geometric agreement thing that because the dice is symmetric, it should be 1/6. But basically, it's mainly used on the replication. Okay, so if you threw a dice 1 million times, in one cases out of 6, you should get a 1 or a 3 or whatever. Okay, so it's really related to this law of large numbers, saying that basically the limiting distribution of the frequency is what we call the probability. Okay, so if we were able to replicate an experiment a billion times, then more or less we will get the probability. But it's not what we talk about here. Here we talk about a model, and basically if I tell you the probability that you will get an accident next year is 3%, how do we assess if this 3% is relevant or not? And I mentioned a very old article by von Mises in the 30s saying that actually working on probabilities for single events is difficult. And I can let you read this statement, but it says basically like probability of dying, it has no meaning. Okay, it has no meaning because basically you will die only once. Okay, so if I tell you that next year you will have a probability of 25% to die, and if you survive, well, I don't know much about this probability, right? There's no way I can tell you if it's correct or not correct. Okay, rare events might occur. So even if I have a 1% chance to get an event, then possibly it will occur. Okay, so this is a problem. We have a philosophical problem actually. How do we define those probabilities, right? So we cannot really define the singular event because basically what we call what we define as the expected value of y conditional on x, maybe we won't have a lot of observation with this conditioning. Okay, so defining this expected value of this probability is complicated, and this conditional probability, so the expected value of y conditional on the prediction close to 20 or 15% is an interesting feature because it will help you know if this probability is meaningful. Because if I get a model saying that the probability to go to the doctor is 40%, a good way to know if this 40% makes sense is to say, okay, I'm going to get everyone who got predicted 40%. And if on average, I don't get 40% of those people going to the doctor, it means that the probability is not actually the probability. Okay, this is something that people were talking about in the context of weather forecast, saying that if you say that you got 40% chance of rain, those 40% chance, actually, if you take all the past days where we got this 40% chance of rain, and if for all those days we got rain, then it was not a 40% chance of rain, right? So it's really about the interpretation of what we call the score as an actual probability. Okay, so we are able to make connections between scores, outcomes of models, and real probabilities expressed as frequencies. And it's exactly this question of calibration. Actually, this is something which is coming back from medicine, because there were discussions among doctors about estimation of risks, right? So if I tell you that you got 20% chance of having a disease, you want this 20% chance to make sense. Okay, so it's good to get rankings, right? So it's nice if actually if I get you a prediction of 20%, you get more risks than if I predict 15%. But actually, I want those 20% to make sense, right? So if I consider all the people who are predicted to have a disease to be exactly 20%, if actually out of 100 people I got 40 who got that disease, well, we got a clear underestimation of the model. If actually out of those 100 people we get 10, then we get an overestimation of the risk. And we got these nice graphs. Those are called calibration curves in the article by von Kassler on the fact that actually in medicine and in predictive modeling, we don't really focus on these calibration properties, on the real interpretation of probabilities. And it's something we should address, especially as actuaries, because actually we focus on risks, right? So this is exactly what we are working on. So we started with Michel Delisle and Julien Truffin a few years ago, actually claiming that most machine learning algorithms are not well calibrated. Okay, that's a big issue. We can get calibration in econometric models, but in machine learning, it's more complicated. It's something we're working on with Agathe and several students in the team. Maybe just an illustration. I told you at the beginning that we can play with pictures, actually. So I've been taking some pictures in an article written by the New York Times, actually in 2020, about pictures of people, and they ask if those people look real. Actually, they take two pictures, actually one man and a woman, and they get a flow of pictures going from one to the other one. Okay, so let me show you on a graph. So basically we got that woman and we can transform that woman as a man. Okay, so this is something we can do with generative models in machine learning. We can create fake individuals, right? So maybe you've been playing with that. And my question was, what about the models predicting the gender? So I've been on some website looking at predictions of gender of people. Okay, so again, let me get back to my picture. So I got those individuals. So the first one was a woman, the last one was a man, and we've been able to get a flow, a continuous flow from one picture to the other one. Okay, so we get, I would say clearly, but it's not that clear. I mean, it's very subjective. We got a female and a male, and then we got this continuous variable. And then I did ask an online predictive model assessing the gender on pictures to give me the genders. And this is what we get. So if we look at the top pictures, all of them are predicted as women, okay? Especially the one in the top left, who's actually a woman. The model says it's very likely that this person is a woman with 98% chance. But actually for the first four on the slide, all of them are predicted as women with a very high probability. And then all of a sudden, they are predicted as male with very high probability. Okay, so my point here is, I guess this probability does not really make sense. I mean, if we got a continuous distortion from a woman to a man, then somehow I expect the probability to be a woman to be more or less continuous, right? If you look at the two pictures in the middle, the one on the top right and the one at the bottom left, they are very, very close. The only thing changing basically is the hearings of the person. What is very odd, and it's something we observe in a lot of machine learning algorithms, is actually they're not well calibrated because they're not able to say, I don't know. They're not able to say the probability to be a woman actually is 50% chance. I really don't know. Okay. The models are overconfident. This is something we observe with a lot of models in machine learning. The fact that actually the probabilities don't make sense at all. They really push probabilities towards 0 and 1. Okay. They are extremely confident when, as human, we're not that confident at all. And actually, there's no way you can tell because those are fake individuals. So I don't know exactly if that person is actually a woman or a man, but at least I would expect the model to have this sort of continuity property on the probability and the score. Okay, so this question on scores is extremely important, especially because actually we're going to use the probabilities in the model. Okay, not on the gender, but actually I've seen some actuaries working on detecting disease on pictures. If you get the same kind of outcomes, there's no way you can use those probabilities in your pricing model. Okay, so it's more or less what we were saying. So now I'm done with group fairness. I will just talk a little bit about individual fairness. So individual fairness is not looking at distributions of score, is really looking at individuals. Okay, so the way it was defined almost 10 years ago was this very simple statement: if the protected attribute, race or gender, of an individual had been different, things should be equal and the decision should be the same. Okay, so it's really a definition of counterfactual. So counterfactual actually is a concept that is coming from causality. Okay, so in case you don't know much about causality, I suggest to read the book by Dana McKenzie and Julia Pearl, the book of Why, and actually they explain this how to answer the question of causal effect. And especially in this book, you get a graph, which is the ladder of causation. And they mentioned something like a three-step ladder. Okay, so we have the first one, which is at the bottom, which is association, which is what if I observe something? What if I observe X to be something like that? So it's really the very basic idea of correlation. Okay, so based on the correlation between X and Y, I want to make a prediction. Okay, so I'm just going to use a correlation. And then we start to get the causal approach. Causal approach means we're going to make an intervention. What if I do? What if I change something? What if I have a policy? What if I reduce the size of groups of students in a classroom? Do they get better grades? What if I try a treatment? Will you get better? Okay, so it's really about making a treatment and see the outcome of a treatment. And if you know a little bit about medicine, about treatments and pills, you know that you need a placebo. You need to compare. Okay, it's also related to A/B testing. What if I do something while I have to compare with the case where I don't do anything? Okay, so the idea is not to look at all the people who get an intervention or who get a treatment. It's to make a comparison between people who get the treatment and people who get the placebo. Because the problem of counterfactuals is actually you're always in one group. Either you get the placebo or you don't get the placebo, and you get the medicine actually. Okay, so we try to match individuals to create counterfactuals. And matching, as I told you, is very deeply related to optimal transport. Okay, interventions is about making seeing if a treatment is effective by making an experiment. This is the second step of the ladder of causation, but actually, in some cases, we cannot make an intervention. And this is the case for fairness, because actually I cannot make someone black, white. I'm going to pretend. Okay, so it's really something purely theoretical. What if we had made an experiment? What if actually that person was not a man but a woman? Okay, so it's really a counterfactual approach. And this is what we call counterfactuals. It's really about creating a fake individual with the same characteristics, but being in the other group, right? Another thing that we're working on is the use of networks, right? So networks are interesting because possibly in the sharing economy, we want to get peer-to-peer insurance, right? So it's not centralized insurance where you get an insurance company, but maybe you can get people willing to share risks together, right? But in that case, you still have an issue because of what we call homophily. Homophily is the fact that actually when you have similar features, actually you tend to be more likely connected. It's more likely that you will get connected. And this is problematic because actually there's a lot of pitfalls in graphs. And especially when we want to define objects, when you have graphs, it's slightly more complicated. Okay, so I won't talk much about that here, but it's something that I'm working on. So here we focus on individuals. So I will relate that to individual fairness, but it's based on the fact that individuals can be connected, actually. Okay, so there will be a crash course in Chicago on that issue in July, but it's something we're also working on. It's also related to interpretation. So I will talk a little bit about interpretation because It's an issue we have in actuarial science. And there's a very nice article by Glenn, actually a series of articles discussing the questions of objectivity of actuaries. Okay, so it looks like because actuaries are using numbers, it brings a lot of objectivity. But as we've seen before on the Compass example, even when we use the same kind of data set, even if we have a very strong mathematical framework, we can get very different outcomes, very different conclusions. So I'm not that sure about the objectivity and the subjectivity of definitions of concepts. So we have to be very careful when we talk about fairness, because it's not because you do something extremely objective that actually there will not be any subjectivity. It's really the fact that actually it can be also related to um, standard things we know in human sciences, like Goodhart's law, saying that basically when a measure becomes a target, it's no longer a measure, right? So if we know that we're going to focus on such specific metric for to quantify fairness, then there will be some fair washing. So it's possible to distort a lot of things. And we have to be extremely careful about the fact that actually actuaries pretend to do math, to do objective, but basically they're telling stories with numbers. Okay, they try to explain the model based on some stories. Okay, they might tell you, well, it's legitimate to the gender because actually women drive less than men, possibly, and because exposure has a direct impact on the risk, right? So it's always about telling stories about models. So we have to be extremely careful about interpretation. And again, this is something we want to work on, because explainability and interpretability of black box model is a very hot topic in computer science, and is something we will be working on. We did write a small paper on that one. Maybe I will just focus on graphs. When we have two sensitive attributes, okay? So assume that you want fairness based on the gender, but also on the race, right? And the thing is, when you start to get multiple explanatory variable or multiple sensitive attributes, it can be a little bit too tricky, especially when the sensitive attributes are correlated. And what we did in this article that I mentioned, actually, we wanted to get a discussions like, I'm going to give you a discount because possibly you have these characteristics. So maybe because you're a woman and women are less risky than men, then you will get a 5% discount. But because you're black, maybe you will get an increase, right? So I'm really talking about discussions about fairness and how we sequentially explain the impact of variable, right? And the thing is, when you start inverting the order of interpretation, we get very different outcomes. So my point is, we can do that for sensitive attribute, but also mixing sensitive and non-sensitive attribute, right? So you can get a discount because you drive less, right? But if we add on top of that the gender, then the gender will be absolutely neutral. But on the other hand, if we start with the gender, I'm going to give you a discount because you're a woman, and then I look at the distance to drive, and then it will have no impact. So depending on the order of the variables, then the interpretation is very different, right? So just to conclude this talk, so we're working on those questions related to fairness, with connections with a lot of other topics actually in machine learning and artificial intelligence, such as calibration, but also interpretability of models. I don't want to take any philosophical position regarding fairness. Against my point is more, if regulation says you're not supposed to make any discrimination based on this variable, then what I'm saying is we got tools, we got techniques that can guarantee that actually you can get fairness, right? So it's related exactly what I was telling you about before when I was showing you optimal transport. So it's possible, once you created models, to ensure that you will get a fair model just by combining them, right? But I don't say that you should go for it. It's just that if regulation asks for it, or if your management says that you want non-discrimination with respect to one possible features, like you don't want to make discrimination with respect to some group of people, like militaries, handicapped people, or whatever. So some of them are based on values in the company. Some are based on legal definitions, right? We can do it. The thing is, we're not that sure that we should go for it, because I mentioned some statements. One of them is saying is basically that if you want to get race neutrality, then you will need to go against it and go for actually affirmative action. Okay, so if you want to get a fair model, you should create unfairness. Okay, so if you want people to be treated equally, you actually must treat them differently, which is a strong paradox we have, which is the fact that, but it's a long-term objective, right? So if we want to end with an equal society, we need to distort it somehow to create injustice right now, so that in the future it will be fair, which is a first way to see discrimination. The second one is more recent. It says basically, if you don't want discrimination, don't ask for discrimination. So just try to be blind. Okay, it's another perspective. The two of them are maybe two very different extremes on the spectrum of discrimination. One says go fully for it, the other one says don't go for it. Maybe it should be somewhere in between, but at least we can do whatever we like because we got all the mathematical background and framework to work on that, right? So there's a lot of other discussion in the book, and I'm going to stop here, and I will be available for questions. Thanks a lot.